market news now. Asian shares closed up while the dollar pulled back from a one-month peak as investors took stock of the slew of U.S. economic data that showed a resilient labor market ahead of a crucial non-farm payrolls report due later in the day. Stocks were mixed and bonds fluctuated before U.S. employment data that will be scrutinized for clues on the path for Federal Reserve interest rates. Locally in company news, shares of Standard Bank lifted more than 5% this morning when it flagged a rise in interim profit of more than a third, benefiting from a sharp rise in interest rates and a growth in its client base. To give us more perspective on the markets, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. Your sense of global market sentiment as we look ahead to that non-farm payrolls report.
Right, so I think that we're obviously waiting quite a lot on that. I mean, in locally, the major indices are being driven by our currency at the moment, which in turn is driven somewhat by commodity prices. Yeah, I mean, it's a case that the Fed, I think, is going to give the next lead, and of course the other is, of course, the economic data, inflation, and so on.
When you look at what's happening with the decline in U.S. bonds, how are you interpreting that?
Right. So they're basically two important drivers in terms of bond markets. And one is growth in the economy, and the other is actual inflation and how these two factors interplay. And at the moment, I think there's quite a lot of digestion going on. I mean, we've seen a relatively successful turnaround in inflation coming through. But at the same time, growth has managed to persist, and we have seen a relatively firm employment markets. Now, all of this is a bit of a new territory for markets, seeing those work out so nicely. And I think there's a little bit of suspicion there, and that I think explains a lot of the hesitation we're seeing in markets at the moment. They're refusing to take the data almost at face value. So we're at a bit of a crux point at this time.
Warwick, I know we were having technical issues with you just before we got back on air, and we had indicated that it would have been a telephone interview, but it is actually a Zoom interview, and many of our viewers are watching you on screen right now. But let's look ahead to that U.S. July non-farm payrolls reports. What are markets forecasting, and I suppose also what do the potential outcomes mean for Fed interest rates?
Okay, so the consensus estimates are for about 200,000. I mean, jobless claims have actually ticked steadily lower since April, so they've been quite firm. And of course, we saw in the last few days some stronger than expected ADP figures, which is a private business figure, and that added 324,000 jobs in July. So, and that was well above forecasts of 189,000. So pretty strong and pointing towards some very tight labor markets. I think what we're looking to see is perhaps no more than that 200,000. I mean, although there's this sort of linkage between growth and employment figures is perhaps questionable in recent times in the US. Nevertheless, it's a long-standing view on markets. A very strong employment number, I think, would be concerning. But obviously, we don't want to see employment so bad that it impacts growth either.
Well, Warwick, just quickly, is there something to be said about the moves in oil prices?
Look, we've seen the Saudis indicate that they will voluntarily take a million barrels a day off the market, which has ticked the market higher. But I must say that would puts oil at odds with the rest of the commodities complex, which has generally been quite soft. So yeah, I think it's a relatively short-term event, but obviously we want to watch with interest, because when trouble starts, it often does start in the oil market.
Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Securities. Let's take a quick break. When we come back, we'll have SME on point with Diabo Soto. Stay tuned.